Hello, everyone. Welcome to a Thursday edition of One-on-One Chats. And this is a special edition because, as you can tell, it is not the one, the only, the man, the myth, the legend, Shawnee Hill taking part. It is me, your favorite partnerships manager here at NiceJob, Curtis Davey. Today, my guest is the VP of Business Operations for Jobber, Abheek Dhawan. And I'm very excited to welcome here to this chat because as a self-professed data geek, I am super excited to share everything that they've put together over at Jobber that paints a really great economic picture of the current situation that we're living through, as well as, some hints for the future, as well as, what we've gone through over the past few months. I know it seems all doom and gloom, and certainly we've seen some rays of sunshine in the last few months with everyone getting back to work. But I was actually surprised to see that all the data in their report is mostly positive for the home services industry. Now, if you're not in the home services industry, you might be feeling some extra pinch. There is light at the end of the tunnel, and I do believe we are hopeful that all will continue to get better. But this will help paint a picture for anybody in those home service industries to get an understanding of what's going on. Now, these economic reports that Jobber has been putting out have so much great information in them. It's been a treasure trove of data and wealth for people to know. And it's not just for data geeks like myself or for companies like Jobber and NiceJob to use to talk to banks or investors. These are hard, concrete facts that even small business owners can use to improve their processes, to understand what's coming down the pike, and then, pivot or make investments or strategies to adjust for that. What can a home service business owner take away from these reports, Abheek?
Hey, thanks for having me, Curtis. So first and foremost, I think it can just be really helpful for home service businesses to really understand that what we've been seeing over the last 6 months or so now is a historic phenomena that's affecting absolutely everybody. My family actually owns a small business as well. And so I know firsthand how hard it could be to run one of them. And it's so easy to be tough on yourself and blame yourself for, when you're kind of falling a little bit. But the reality is the whole worldwide economy has been shaken up by this and we're kind of all in it together. And so, speaking to the report itself, it shows that we started off the year actually quite well, specifically for the home service industry. But, things started to take a bit of a turn in March. Before that, we were seeing the same kind of growth that we were seeing for the last couple of years, which was very healthy. And then, as the turn happened in March and things kind of hit their worst in April, there was a huge drop in consumer demand, employment, and of course the revenues for these businesses. And not only was the dynamic really apparent in home service, it was actually much worse for most other industries like apparel and clothing, restaurants, entertainment, tourism, etc. And actually the home service category as a whole has actually been shockingly resilient throughout it all. After a down period that really only lasted about 6 to 8 weeks, it started to recover pretty quickly towards the end of May. And then, June actually looked surprisingly positive. And in some of the industries within the home service category, June's actually already back at pre-COVID levels, which is incredibly impressive. And so I think overall, the home service category has bounced back way quicker than just about any other. And, although we have a lot of confidence as a company that's very focused on home service, small businesses, it's been surprisingly positive for us as well. And we're really excited about what we're seeing.
Yeah, that really aligns with what we've seen as well. March, April, anecdotally was very, tough times with a lot of uncertainty. Nobody knew what the future was going to look like. And as a result, I think we saw a lot of businesses sort of pull back, really try to understand what might be coming. Certainly, check their reserves and their caches to see, what they had for supplies to outlast this. And then as we saw the economy start to reopen in parts of the United States, certainly in UK and Canada, we really saw the numbers started to go back up across the board, and it was great to see that demand rebound. With Jobber data being a big component of this research, I know you had some other sources. Can you give us a bit of an idea of which industries you have the most data from internally, and then what are some of those other sources you pulled from?
Yeah, certainly. So fortunately at Jobber, we're lucky to have customers from all across the home service category. There are about 50 plus industries as a whole in this category. And the biggest ones are, green businesses like lawn care and landscaping. There's like over 500,000 of them in North America. Another big category is, cleaning and other sanitization services. There's a few 100,000 of those in North America. And then there's also a big, kind of contracting segment that includes things like construction, electrical work, HVAC, plumbing, and there's close to 1 million of those in North America as well. So we have all of them really well represented at Jobber, and in our data, we have thousands of these businesses on our platform. So it's really great to be able to see the whole landscape when we do our research. And even outside of those really big ones, we have a great amount of other more niche industries that there are tens of thousands of in North America. So businesses such as pest control, pool cleaning, pressure washing, we are well represented in some of those as well.
Awesome.
And sorry, outside of our own data, other kind of research we've gotten is all government organizations, basically. So U.S. Census data and other such resources.
Yeah, I know you pulled from the SBA as well. Correct me if I'm wrong, but most of this data is U.S. focused, correct?
Yeah, actually, all of the data in the report is U.S. focused.
Right. Okay. Yeah. Just wanted to have that disclaimer so that our UK and Canadian customers know that while this paints a picture of North America and certainly the largest economy in the world so far, I'm sure it does have a similar comparison to the UK and Canadian markets as well. But if anybody has any anecdotes, though, feel free to chime into the comments with how you've seen and if this data actually matches your business as well. I'd love to know sort of how accurate this is in the different markets as well, and if you see it paints a similar picture. So going back to the beginning of the year, specifically the months of January and February, when we were all blissfully ignorant of the coming pandemic and how it would affect our lives, your data suggests that the year was off to a great start, which we can see as well. That was 4% and 8% growth in demand, as well as 10% and 12% growth in revenue in January and February. Can you speak to the growth that the home services industry has seen in that past several years, and what has contributed to it, and if this year was off to a similar start?
Yeah, definitely. And so when we talk about revenue growth in this report, when we're looking at the government sources that were available to us, we were looking at revenue growth of like the full category as a whole, including business closures, new business starts, things like that. But when we looked at home service, the home service category, we were looking at our own data, and so we actually we looked at it in terms of how well is the typical home service business growing, because home service doesn't quite have the same level of government data available for it. And so, what we saw is these typical home service businesses started off 2020 at like a 10% growth rate, and over that, which is very healthy. And that's actually almost exactly the same kind of growth that we've seen in 2018 and 2019 as well. The last couple of years, we saw this like 10+% of growth, which is super healthy compared to, the US GDP that has been growing at a relatively slow 2 to 3%. But then, zooming out of our own data in this report, if you look at the home service category as a whole, over the last 5 years, it's been growing like crazy. And there's a bunch of different reports out there that talk about it. And most estimates put this overall category being valued at over $500 billion a year at this point. And the annual growth estimates range anywhere between 20 to 50%. And anywhere between that range would be pretty incredible, and it would mean that within a few years, this category as a whole is going to be like over $1 billion or over $1 trillion, annually, which is just an insane number to think about. But really, this growth over the last 5 years has been happening for a variety of reasons. One, I would say most importantly, is people are busier than ever today. And they really value convenience. So most families, nowadays tend to have both parents working, and there's more and more demand for home service professionals to do things that were traditionally maybe done by people themselves. Whether that be building a deck outside in your backyard, just cleaning your own home, or lawn care and landscaping outside. All these things, people would rather just get professionals to do them nowadays rather than, do them yourself. Another big kind of demographic trend that we're seeing is that older homeowners, so ages like 50 plus, they're actually a massive size of the market in terms of like overall home ownership in the country. And their overall spending power is like really high as well, because obviously they've saved, lots of money over the years. And so there's actually this study from Harvard's Joint Center of Housing Studies that shows in the 2 years before 2018, there was 150% growth in spending by these homeowners, and that overall spending was about 120 billion in 2018, and that's only expected to grow because more and more people are going to hit this 50 plus age segment over the next years, as that's just the population dynamics of the country. And then the last thing has been that there's so much access to cheap financing available over the last 5 years, and there was a booming economy. Interest rates were lower than they've ever really been. There was access to these like home equity lines of credits and stuff like that, and so a lot of people were taking advantage of that to do renovations at home and things like that. How all these things look in the future remains to be seen. We'll see. But over the last 5 years, it's been incredible growth.
Yeah, I mean, even myself as a non-homeowner, but somebody looking to get into the market, it's been interesting to see, some of my hobbies include gardening and some home renovations, even just around the apartment here, where things that are improving my house. And going into the home hardware store or any local hardware store, I find that the shelves are looking a lot more bare. It seems like they're busier than ever. And certainly some of the economic data we've seen from these companies like Rona and Home Hardware seem to see that they're busier than ever. So it certainly seems that everyone is working on some form of home improvement, be it themselves or just the contractors that are also filling up with supplies to heading out there. So yeah, that holds true of my community as well. Because we define, home services so broadly. There's a lot of different categories, and some of them are very different from each other within that broad category. Was your data able to highlight any specific industries in the home services category that were off to a better start than others? Maybe in-home versus outdoor? Or was the growth in your report of those first 2 months pretty consistent across the board?
Yeah, so we do actually get into some specifics in the report, and like I mentioned earlier, there's like 50 plus industries, so we don't go quite into the depth of like every single industry or anything like that. But we have pulled together certain industries that have similar dynamics and created these segments that we look at together. And so, looking at the cleaning segment, which is made up of businesses like residential cleaning, commercial cleaning, pressure washing, et cetera, they were off to a super hot start at the start of the year. They were seeing way higher than industry average growth, like 17% year over year early in 2020. And that was great. Comparing that to contracting, which is made up of businesses such as HVAC, plumbing, electrical work, things like that, they were seeing, generally industry average growth, like 11, 12%. And then the green segment was seeing just below industry average, so about 8% earlier in the year. And that's made up of businesses such as lawn care and landscaping, tree care, et cetera. So, overall, we saw a pretty hot start across the board. But then we did see the indoor businesses start to take a dive much quicker than anybody else. Cleaning and especially residential cleaning fell pretty hard in March. And, it turned before any other industry. Contracting also took a bit of a hit, though not quite as dramatic in April. And then the green segment, it didn't really fall into the negatives year over year. It was kind of flat. But for the green businesses, it's their hot season right now. March, April is the start of summer in a lot of the North American geographies. And so they just saw a lot of missed opportunity, essentially, which was unfortunate.
Yeah, those numbers really stand out to me. And for one, that 10% growth is normal in the home services industry, which any other industry would absolutely love to see those kind of numbers. So that's huge in itself. But then, yeah, sort of that seasonality of how cleaning in the early part of the year was a little bit hotter than landscaping, which is probably, like you said, just starting to come into its own, especially as the report sort of completed in June. So June, July, August, I'm sure those numbers will start creeping up. The demand drop that we did see, though, in the home services industry in that first part of the quarter was pretty scary for everyone, including ourselves. For a while, it looked like a truly nightmare scenario with a number of factors, really. Have you ever seen anything like that before? And were you able to compare that to the last economic downturn in 2008? Because it feels unprecedented at the scale we're going through right now, but we have certainly something to benchmark it against with the 2008.
Yeah, I've certainly never seen anything like it. And I guess to be fair, like living through a pandemic is a bit of a once in a century sort of experience. So I don't think most of us have never really seen anything like this. But I think the reality is that what we have all gone through is actually much worse than any recession, because it wasn't a lack of spending power or an unwillingness to spend money that caused these problems. It was actually a government mandated lockdown. So it was essentially impossible to even go out and spend money on things because most businesses were just completely shut down. Thankfully, most home service businesses don't actually depend on brick and mortar to operate. They, go to different places. They're mobile in nature. And also many of them were deemed essential by the government. So, many of them could continue operating. But comparing to the 2008 data, and we did look at the 2008 recession data, I think the main difference is just the speed at which everything has happened. If you look at the fall in stock prices and consumer spending or unemployment, everything that happened in 2008, the same things have happened this time around, but just much, much faster. In 2008, the fall of everything was much more gradual in nature, even though it can seem like it was so drastic. It actually happened over a period of about 18 months to 2 years, and then the recovery took several years as well. But this time around, all the fall happened within 6 weeks, 8 weeks. And then the recovery has been like relatively quick as well. So I think it's just definitely a very unprecedented situation. And I think we're all trying to really figure out what it all means.
I think that's what makes this report so compelling to me, is that it's a snapshot of a time in history that we've never been before. And like you said, you've referenced 2008, which is great to have that sort of benchmark. But wow, it's just so unique what we're going through. And this economic reports that you started with, I guess you created one earlier in the year, correct? One for sort of the first COVID, to give a snapshot of that?
Yeah, so I guess it was in April, like mid-April or so. We, all of this was just at such a peak, and there was so much interest around like how is COVID impacting the home service industry or just the economy in general. So it was actually our first report ever, and we realized we have so much data in this space that it's kind of our responsibility to create transparency and share that with our community. And so we, built out that first report and published it back in April. And then because we saw great engagement and that sort of thing, we decided to do it on a quarterly basis now. So that's why this time in July, we've published a last quarter report, and we hope to continue doing that in the future.
That's awesome. I definitely look forward to reading all the rest ones because, every quarter, every month seems to be a bit different during this pandemic. And certainly the economic data we're seeing and just the opportunities that businesses have to go out and work and really start to build things again is changing on week to week and certainly from state to state and country to country. So I look forward to seeing more of that data coming out. Back to the actual report data, did the industries that you saw have higher growth in January and February also see lower churn or lower downturn compared to others? So was it sort of the industries that stayed strong or started strong, stayed strong?
Actually, no, it's super interesting, but we actually saw the opposite. So the cleaning segment was growing the fastest at the start of the year, but then it got hit the hardest, in March, April, and so forth. And I think that's due to two reasons. So one is that a lot of the cleaning industries work indoors. So, and in both the cases of, let's say, residential and commercial cleaning, they both were impacted. In the case of commercial cleaning, a lot of businesses shut down their operations, sent their workforces to, work from home. And obviously, if the office is shut down, they don't really need sanitation services. And then in the case of residential cleaning, most people don't really want a stranger coming into their home during a pandemic. And then also, specifically thinking about residential cleaning, some of that work is also a little bit more discretionary in nature compared to most other home service related work. If you lose your job or money becomes tight, you're a little bit more likely to stop getting professional cleaners and you clean your house yourself. But, if there's a plumbing emergency or, some pest control sort of issue in your home, you have to call a plumber or a pest control company. There's really no alternative there. So I think generally speaking, discretionary spending tends to be a little bit more volatile. And so when times are good, any industry that relies on discretionary spending, such as entertainment, travel, et cetera, you see them boom. And when times are tough, they start to kind of contract a little bit more than others.
That really seems to fall in line or follow the essential services list. So those that were deemed essential during those first few months and continued to work, I guess, got a little bit of a head start and were able to continue operating, whereas those deemed not essential, which oddly enough for a little while in some states did include cleaning companies, sort of got knocked back a little bit, which makes sense. So likewise to the downturn that we saw, the rebound was 15% year-over-year increase in demand in June for the industry as a whole, and that swing from May to June was 36% in 2 months. Have you ever seen anything comparable in terms of that big of a shift in downturn to growth again?
Yeah, no, again, it's been such a unique situation to see that sort of rebound in such a short period of time. And I think the reason why is that it's just such a super interesting dynamic right now, because on one hand, we're seeing, historic unemployment, never before seen since the 1920s sort of thing. But then at the same time, there's a lot of high paying jobs that have been essentially unaffected because, whether it be some people in finance or tech and many jobs in many industries, companies have been able to send their workforce home and they can work remotely. Essentially kind of overnight, they were able to do that. And so as a result, you had all these people that were sitting at home, kind of locked up, and they had actually more disposable income than ever before because they weren't spending any income on, public transit, going to their office or anything like that. They also weren't going out to restaurants for dinners and drinks with friends. So they actually had more disposable income than usual. And so as an example, you saw some industries really start to boom as a result of that. So if you look at e-commerce as a whole, it's been going crazy over the last, 3 to 6 months. And I think it's the result of a lot of these people sitting at home and they're able to spend this extra kind of income they have on just buying things online and that sort of thing. And I think for the home service category, as the lockdown started to lift, some industries such as landscaping and contracting saw the benefit of that similar sort of dynamic. A lot of these people were sitting at home and they started noticing things around their house that they otherwise maybe wouldn't have because they're so busy usually. But as a result of that, a lot of people are like, you know what, I'm spending all this time at home anyway. Why don't we do a kitchen renovation or a bathroom renovation, or let's build that deck in the backyard that we've been wanting to do for such a long time. And I think as a result of that dynamic, we saw this very quick, rebound, which has benefited at least some of the industries within home service.
Yeah, and COVID hit at a really funny time in the year in that, it was in the early stages, it was just starting to hit spring, which for some industries is really just the start of their busy season, the end of their really, really slow season and sort of those dead months of winter. And then most of the industries really hit their stride here in the summertime. Every home service business in the industry has some level of seasonality and change in demand in the year. There's always a bit of a slow season, typically around Christmas or autumn depending on the industry. But how has this unique time with COVID hitting compared to traditional seasonal swings? Has it been bigger, smaller?
Yeah. So, just looking at the data in a bit of a silo, what we noticed is that the volume of work that was done during that April period, which was, the very bottom that most people saw, wasn't quite as low as Christmas, but it was kind of in the same zone as Thanksgiving. But I think that the biggest problem is that usually businesses expect that sort of downtime during their low season. It's something they've been seeing for years. They know how to deal with it, whether that means, having fewer employees on the payroll, holding less inventory, things like that. But the unique dynamic in March and April is that many of these businesses are actually gearing up for their busy season. So they might have brought on seasonal employees. They maybe bought more inventory or tools, maybe a new truck. And in a scenario like that, when you see a dramatic downturn super unexpectedly when you're gearing up for your busy season, I think that's a bit of a lethal combination for a lot of small businesses. And I think a lot of people were hurt by that pretty dramatically.
Yeah, it's tough to gear up for your busy season just as the pandemic's hitting. It kind of really throws your traditional plan out the window. So a lot of, the stuff that we focused on early on with our customers is just helping them get those processes and strategies in place. And I know you guys have done a lot similar, really helping to build up and work with your home service customers to really find out a new strategy, to create a new process or protocol for what's happening, and basically throw the baby out with the bathwater and start fresh. One of the data points that stood out to me from the report was the relatively low drop in consumer spending on the category, I believe, was furnishings, household equipment, and routine household maintenance, compared to other categories such as healthcare. It's incredible to me to think that, when we're in a pandemic of all times, that healthcare spending drops in comparison to some of those other more discretionary spending. But when you think about it, it's actually kind of logical. People are spending that much more time at home. They see the things they want to fix, and they go ahead and do it with that discretionary spending, as you said. What were some of the things you were able to discover in your data to speak to why consumers prioritize spending on their homes?
Yeah, so that super long category is how the government describes it, and it's the closest one that we could find some government data for. But I think that dynamic that you speak of is actually one that really surprised me as well, especially considering that healthcare was one of the few categories that actually was essentially unaffected during the 2008 recession. There was a big fall in things like apparel and entertainment, but healthcare was actually a bit on the up and up during that recession. But I think, like I mentioned earlier, the reality is that this historic downturn that we've seen is actually less of a recession or a traditional recession and more of a government mandated lockdown. And so due to that, what happened is that many healthcare related businesses such as dentists, physiotherapists, chiropractors, they all kind of shut down apart from seeing very, like emergency sort of cases. And even thinking about hospitals, a lot of people started avoiding hospitals unless it was a true emergency. If there was an elective surgery, they decided to delay it because they didn't want to go into the hospital, while a pandemic is on the loose sort of thing. So as a result of that dynamic, healthcare took, a big hit during this recent time. And it was more due to the lockdown and pandemic dynamic and not related to people's like desire or propensity to spend. On the other hand, like you mentioned, a bunch of home service work is done externally. Many contracting jobs are outdoors, lawn care and landscaping is all outdoors. So it's pretty safe from a social distancing sort of perspective. And there's also a lot of home service work that's non-discretionary in nature. If you have a HVAC emergency or plumbing or pest control, you have to get it fixed. There's just no way around it. And so I think that's why home service actually saw, compared to even a category like healthcare, relatively positive sort of performance.
That's interesting to note that difference between 2008 and today. Today being so health related, and 2008 being completely unrelated to health, and how those spending in that key category has shifted a lot. I was also happy to see that job losses in the home services industry was much lower compared to some of those other industries. And certainly, from anecdotal evidence I had from our customers, if they did lay off customers or employees, it was a much shorter furlough, much shorter layoff than some of the other industries who might still be out of work as a result of these lockdowns and situations per state. Were you able to see a difference in the specific industries within the home services umbrella in terms of, outdoor industries being less affected than in-home industries?
Yeah, definitely. We noticed that the employment dynamics were directly correlated with, whatever these businesses were seeing in revenue losses and things like that. So, if you see businesses such as cleaning that took a big hit during this time, they saw the most kind of unemployment happening as well. Comparing that to contracting that were, slightly better off relatively, they saw a bit less unemployment. And then in the case of green industries, because they were actually kind of flat year over year and didn't see a huge loss, just more of an opportunity loss, their unemployment was, even less so impacted. So very, very correlated, we noticed to the revenue growth.
Yeah, I'm very glad to see that. Turning our attention to the future now, or if we can, look into our crystal ball with the data we have. I know the historical data can't predict the future, but with the resurgence of COVID cases in most communities, in the US and the world for that matter, there is a great uncertainty on the horizon, continues to persist. What lessons, if any, can a home service business owner take from this report to inform their strategy for the rest of the year and indeed the coming years too, if necessary?
Yeah, I would say that at this point, we are starting to see quite a recovery. And unless states start to reenact, stay at home orders like they had in April, I think we're past the worst of it and looking towards greener pastures, pun intended. That said, it's really hard to know what exactly is going to happen. We are seeing a resurgence of COVID cases in the US, like you just said. And some states are actually rolling back some of the opening up of the economy that they initially did. There's also all this talk about a second wave in the fall. So really, there's still a ton of uncertainty. So I think overall, most home service businesses are probably going to be treading carefully during this time, which I think is the smart thing to do. However, I would take comfort in the fact that the consumer demand is there. And if you're able to survive through the really kind of drastic downtime, you can see your business return as our society figures out, this new normal, whatever that is. I would also suggest that these businesses really try to take advantage of some of the emerging trends that are showing up that actually, help them out. So, we're noticing a lot of consumers are looking for a more technology-oriented, contactless service nowadays. So whether that be like online booking or allowing your customers to pay you via credit card rather than cash or check, it's important to evolve your business with the times. And a software like Jobber can really, really help you do that.
Yeah, I think it really is important to, iterate the strategy. So continue to look for ways to improve it, certainly innovate by, as you said, adopting some new technologies or a new way of working. And then smart marketing, as well. As you said, you want to keep some of that cash. You want to be ready for what's to come and, certainly prepare for a potential downturn again. But as you said, the opportunities are there. So if you can market smartly and certainly iterate and stay nimble with your plan, I think there's great opportunity to be had during this time. Now, Jobber has been a partner of ours for a few years now. We've always impressed by the various initiatives that you guys roll out with these economic reports and both for your customers and for the community as a whole. Can you tell us a few things that Jobber has focused on during this period, besides creating this awesome report, of course?
Yeah, no, thank you. Thank you for recognizing our efforts. Jobber has definitely been trying to do as much as we can to help our customers during these times. Not only have we been directly trying to help them through like promotions for new customers or just helping our existing customers through some tough cash flow sort of times. I think the other thing we're really trying to do is enable them by kind of putting them in touch with their own community and helping them, get together and help each other out. Because at the end of the day, our community and themselves are the experts in running small businesses, rather than us. We have this great entrepreneurial Facebook group with a very active user base that's incredibly helpful with each other. We've conducted several Facebook Live conversations focused specifically on addressing small business challenges during this period. We launched a podcast where we brought on guests that were able to share tips and tricks on how to survive during these times. We're also connecting our customers with, partners, like financial partners that we have that could help them attain the government aid that's available to them right now. Cash flow is obviously very critical for small businesses, especially right now. So we've extended our partnership with Stripe to offer our customers lending as well. So, if they're in a tough spot, they can take on some loans and get through those times as well. And then, lastly, we've been doing a ton of webinars and really trying to educate our customers on how they can be using Jobber and technology in general to really differentiate themselves during this time. So, for example, I mentioned we've been seeing a surge in touchless payments during this time. And we want our customers to be able to really take advantage of such trends and differentiate themselves. So not only can they survive during this time, but actually, thrive and use it as a bit of a tailwind.
That's awesome. Yeah, I remember when the COVID first hit, you guys put out a great report or piece of information about the various funding programs available to businesses in the UK, Canada, and US. I thought that was a phenomenal resource. So if you're watching and you haven't taken a look at that, you're still looking at what your options are, head on over and check that out. Certainly, as Abheek mentioned earlier, they had a report out in April. So if you're a data geek like myself, you can go check out that report. And as you mentioned, there'll be more coming out. So stay tuned for more great content from Jobber. Last question, with all the uncertainty still on the horizon, the future is not certain by any means. What are you guys focusing on internally for the rest of the year to try and address this and stay nimble?
Yeah, we've been engaging with our customers and trying to get as much feedback as possible about their new reality, because it really feels like a new world. And we want to ensure we're building the right things for them. And that's always going to be our number one priority. So, with that said, a couple of new things that people can look out for for the rest of the year is that we do plan on launching a couple of new things over the next couple of months that are related to better communication between service providers and their consumers, and also some features that will help them increase the value of each job that they book. So that's something that people can look forward to. And then the second thing we're really focusing on is kind of finance offerings, because like I said, cash flow and things like that are super top of mind for people right now. So we are looking at providing better financial tools to our customers so that they're able to, one, help out themselves during this time, but also as they talk to their consumers, just having more options kind of available to them. So without getting into specifics, I think there's some cool stuff brewing and people should stay tuned.
That sounds awesome. We definitely would love a sneak peek whenever you can give us one, but we'll hang back for now. Definitely appreciate you taking the time to geek out with me on this kind of stuff. For all the viewers at home, if you've enjoyed geeking out with me on these kind of topics, leave us a comment, let me know. The one you love, Shawnee Hill, will be back next week to fill in and take his usual spot back. But if you want to see this pretty face a little bit more, or maybe a little bit more geek and data, let me know. I'd be happy to jump on and give Sean a break or two. And Abheek Dhawan, VP of Business Operations, thank you very much for joining me today and speaking to these points. If you haven't checked out any of their economic data or some of the resources they have for small business and home business owners, definitely go check them out at getjobber.co. We'll have some links down below for you guys to check out as well to the report and to follow up with any other questions you have. But we'll leave it there for this week. Thank you very much for your time again, Abheek.
Thanks so much. It's been a pleasure.
Right on. Leave us some comments if you loved what you heard, and look forward to talking to you guys again soon. Bye for now.